JFD, just fair and direct.
Okay guys, so I can see that I'm still facing some technical issues today. So probably, well, the first thing that I said this today right now, I mean, welcome everyone guys. Welcome to the to this Monday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. So yeah guys, I do apologize for kind of going blank here again. Still, like I said, still facing these technical issues. There we go. So okay, guys, before we jump into the charts, as always, just wanted to quickly mention our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, okay, so let's not waste any more of time. Let's jump into the charts, guys. So the first one I want to pick up here is the FTSE 100. Just a quick update. Basically, the index did push above this barrier, the one that I talked about today, this morning, the 7,040 zone, but is currently failing to remain above it. Now, don't get me wrong. Let's see if the US session is going to push the indices a little bit higher here. But at the moment, guys, I mean, we're cautiously bullish. Yes, we are still trading above some of these upside lines, but as you can see, we're kind of struggling right now with this barrier, the 7,040 zone, which is marked by the high of the 19th of April. So yeah, we need that nice daily candle close here above this area, above this barrier, in order to go for some higher levels. So keep that in mind. Now, Dow Jones Industrial Average. Now, looking at the picture here, you can see that last week we've closed. We've closed in the in here, kind of still in slightly negative territory, if I'm not mistaken. Let's just quickly double check that. Yes, we closed slightly in the negative territory, but to be honest, there is not much negativity at the moment. If we even take a look at the cash index, we'll see that the price is trying to make its way higher, and we're currently sitting near the 34,333 territory. So basically above this barrier right here, the 34,257. But to be honest, we're not going to spend we're not going to focus on it too much. We're going to get rid of it. And what I'm going to be keeping an eye on here will be will be this barrier, the 34,454 mark, which is the high of the 14th of May. And if we do climb above this barrier, then yes, this will confirm a forthcoming higher high, and yep, a further push north towards the 34,741 territory could be possible, and that's the inside swing low here of the 10th of May. And let's not forget that on the 10th of May we did reach an all-time high here near the 35,092 territory, approximately around there. And yep, like I said, for now, guys, let's see how all this is going to play out. But the cash index is currently is trading not far from this barrier, but let's see if we can climb above it. If we can, then yes, the more buyers could join in. Similar story is with NASDAQ, and although NASDAQ last week closed slightly in the positive territory, looking at this week, I mean, you can see that we are still kind of remaining or trading above this downside line taken from the high of the 29th of April, and what I said to you guys last week, that if we climb and stay above this barrier, above this well, first of all above this downside line, then above the 13,421 zone, then there is a good chance we could see a further move north. And if we take a look at the cash index right now, we'll see that the price is currently sitting at around 13,520 territories. So which means that basically we are, of course, not near the high of last week, but we're actually still sitting above the 21-day EMA, which could be seen as a nice positive sign. So basically, for now, I would say as long as we remain above that 21-day EMA, yes, we could see some higher levels being met. But if you want to be a little bit more on the safe side, well, you could, of course, keep your eyes on the high of last week near the 13,574 zone. If that gets cleared, then yes, of course, we'll go for some higher levels. And initially, what I'm going to be aiming here for will be the 13,700 territory, approximately around here. And then my next target will be, well, actually not this one, but the high of the 7th of May here. And that's roughly around the 13,815 zone. And then, yes, we'll take it from there. For the upside, if you're looking for some, for the downside, if you're looking for some lower levels, then for me, probably it would be best to kind of wait for a drop back below the downside line here and a drop back below the 13,237 territory right here. And here, yep, from there we could start considering maybe further declines, but initially, of course, I'll aim for this hurdle, the 12,967, which is not far from that psychological 13,000 mark, which could provide some support. So yep, that's why, guys, for now, be very careful. Of course, the downside scenario is slightly off the table. For now, we are looking at some higher levels, but as I said, as long as it stays above the 21-day EMA, then yes, we could consider further move north. And if it climbs above the 13,574 territory, which is the high of last week, then yes, more buyers could join in. Jumping into silver very quickly here. So silver is still trading above this upside line. I talked about this one last week, and what I said is that this area could still continue to provide support together with the 21-day EMA, together with the 27.24 level here, and you can see that so far that's happening. And yeah, this scenario still could be in play and still could work out, but given the picture that we're seeing right now, probably we'll try to take it a little bit more carefully. And what I'm going to look at here is, first of all, if we climb back above the 27.88 zone right here. Yes, I'll start looking at some higher levels, but then my next target will be this one right here, the high of last week near the 28.75 zone, and then we'll take it from there. So we're just gonna keep it short and simple for now. If it travels further north, and yes, of course, great news for the buyers. But like I said, let's keep it short and simple. Let's see, first of all, if we can climb back and stay above the 27.88 zone. If we can, then yes, as I said, next target is the 28.75 territory, approximately around here, marked by the high of last week, and of course the current highest point of this month. Jumping into Bitcoin, so Bitcoin is trying to recover today, so you can see good activity. However, we're still sitting below the 200-day EMA, and even if we see a larger kind of move higher here, still, as long as it stays, for example, either below the 200-day EMA or depending on where, of course, this is going to be trading, but either if it stays below the 200-day EMA or the 21-day EMA right here, we will kind of class this as a temporary correction. This move higher will be classed as a temporary correction before another possible leg of selling, guys. So keep that in mind. Like I said, we are kind of approaching the 200-day EMA from underneath. So let's see if this time it can act as a nice area of resistance. Or should I say, not this time, but can it once again? Because as you can see, last week it did so. It did act as a good area of resistance. So let's see if it can do the same thing again. For the upside for this one, now this is where the difficult part kind of comes in, because in a way, I would say if you want to go for some higher levels, maybe wait for a push back above the 46,000 mark right here. Nevertheless, it still could be a difficult one because we now have this little short-term downside line taken from the high of the 14th of April, and basically since the 14th of April, you can see that the crypto is forming, overall it's forming lower highs, which doesn't really paint a very positive picture. But from the very short-term perspective, I would say if it climbs back above the 46,000 territory, then there is a chance for maybe for a bit of a larger correction here to the upside towards this downside line. Now jumping into AUDNZD, so one of my favorite ones that I kept mentioning this one last week as well, and basically you can see why, because basically what I was saying that this highlighted area, this is what I'm watching in order to consider some higher levels. But what I said to you as well several times that I prefer to see the daily candle remaining above this area, above the daily candle body remaining above this hurdle, above this 1.0793, because as you can see, we keep getting overshoots, but we don't really get that body of the candle staying above it. So that's why this one's kind of an interesting one, to be honest. And now we can see that we're once again dropping back below this 1.0766 territory. I spoke about this level previously, so yeah, I mean, at the moment, everything's kind of, let's say, it's not looking favorable for the bulls. However, if once again the 200-day EMA provides support, we might see maybe another rebound here. So that's why I'm going to be very careful for now. From the very short-term perspective, I'm still aiming for the downside, especially if today, for example, if this daily candle remains stay below this 1.0766. If it does stay below it, then yes, like I said, my next target is the 200-day EMA, and then we'll take it from there. USDCHF, so this one is still kind of undecided, I would say. I mean, in the near term, because from the kind of a more of a medium term perspective, maybe this is still trading to the downside, still trading below this downside line taken from the high of the 1st of April. but as you can see, it after it dropped below this 0.8985, 86 territory here, it dropped lower, then it kind of drifted back above it, kind of so basically violated this hurdle. So we can say that this hurdle is no longer attractive. The more attractive hurdle is right now this one, the low of last week near the 0.8954 zone, and if we get a nice drop below that hurdle, this will confirm a forthcoming lower low, and yep, further declines could be possible. For the upside, what I need to see here is, of course, we need to see a break of that downside line and also a push above the 0.9048 zone. And if we do see a pop above that, then yes, of course, higher levels could be met, and we could aim for those for that 200-day EMA, of course, or maybe even higher levels. But again, that's only in the scenario if we get that break of this downside line and we get also a push above the 0.9048 zone. If we don't, if we see instead we see a drop below the 0.8954, this will confirm a forthcoming lower low, and yeah, further declines could be possible. Now GBPUSD. So here, probably let me just start fresh again from this one because it's a bit of a kind of a chaotic chart here. So first of all, probably instead of even drawing any trend lines, I want to draw a resistance barrier, which is the highest point of February, and as you can see, it continues to provide good resistances. This 1.4243 level marked, which is the highest point of February, is still doing its job and acting as the highest point of this year so far. Of course, the current highest point of this year. Now, in terms of the upside, of course, yes. Looking at all this, just kind of you want it or not, you would still need to kind of wait for that pop above the 1.4243 levels in order to get a little bit more excited with the upside, because then this would confirm a forthcoming higher high. Now, in terms of the downside, of course, currently you can see that there is a bit of weakness. It seems like there is a bit of weakness, and the pair is kind of drifting to the downside a little bit. However, it still remains above some of these upside lines. Now, just let me just double check something here very quickly. I don't believe that this is going to be the case. However, well, we could keep that on the chart, but it's very tentative, to be honest. And yeah, so I would rather not drag it all the way from here. I would rather keep it from the low of the 12th of April. And in a way, you can say that any kind of any move lower here could still be classed as part of a corrective move here before another possible leg of buying. So let's put it this way: if the pair starts falling somewhere below this hurdle, the 1.41 zone right here, then we will consider a bit of a larger correction to the downside, where the next target, of course, could be the low, the 13th of May near the 1.4006, or this upside support line, and then of course, yep, we'll take it from there, and then we'll see if the pair rebounds or not. But again, at the moment, this scenario is only if we see a drop below this 1.41 zone, because in a way the pair is still, I would say, relatively strong, unless the US dollar starts strengthening, of course, but the pair is still strong. And but my preferred scenario for the upside is the break above the 1.4243 zone, and then we'll take it from there, of course. Euro against the South African rand, very quickly, something that I mentioned a few times in my previous videos, because I do like to look at these exotic pairs like the euro against the South African rand, the euro ruble, US dollar against the Turkish lira. So yep, those are sometimes providing very interesting setups. And here, for example, you can see also a similar situation we are having a very nice setup here. So basically, we once again tested this hurdle, the 16.9560 territory, approximately around there, of course, because that area, and let me just scroll back here, that area also did its job back here in March of 2020. So that that's the lowest point of March of 2020, and currently that area is providing good support. So at the same time, I mean, we are trading below a couple of downside lines, so one of which is this one taken from the high of the 11th of January. The slightly shorter term one is taken from the high of the 29th of March, and yep, something like this basically. So we have this interesting kind of two lines here, two interesting parallel lines which are going lower. So basically, if you want to aim for the upside, well, at least in the beginning, you would need to see a break of this shorter term downside line, and then yes, higher levels could be met. But then there is this other downside line, which is this one taken from the high of the 11th of January, which we would need to also see a break off in order to go for a further move north. And yeah, so but again, before I can kind of jump into euro dollar, still, if you want to aim for the downside here, guys, I mean, there you have the full right to do it, because we're still below all of these downside lines and we're near this key support zone. If this gets clear, then we see the daily candle staying below it, then yes, further declines are possible. And finally, Euro USD. So just a quick update. We continue to have this, to see this roller coaster ride here, up and down, up and down. So yeah, I mean, at the moment, the same analysis remains. The one that I've mentioned this morning still is valid. So we need that pop above the 1.2243 territory in order to go for some higher levels, because then yes, more buyers could join in. And but I'm then not going to drag this one way too much to the upside. I'm just going to aim for that 1.2350 territory, which is marked near the highest point of January of this year, and yep, also which is the current highest point of this year as well. So yeah, that's my next target. That's going to be my next target if we climb above the 1.2243 zone. For the downside, I need to see a break of this upside line and then a drop below the 1.2123 zone. So guys, that's it for this session. I hope you found it useful. Once again, I do apologize for the technical issues that you couldn't hear me. So yep, hopefully everything can get back on track. But yeah, guys, if you want to catch me tomorrow morning, as always, my Traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful evening, stay safe, and I'll see you later. Thank you very much, and bye-bye.